All right. Good morning, everybody. So we survived earnings on Microsoft. The market did not crash and burn. Yay! That's a good start. Oddly, though, and I posted in the chat um, this really nasty headlined article had come out on Bloomberg after earnings, and it kind of slanders some of the FANG names. This is normally a headline that you would see on one of those, I don't know, clickbait places, right? I got that. I cut that off of Google, off of Bloomberg, and that just is a very odd thing to see right after earnings. So I named today's stream Dead Cat Bounce Redo. If you were to go back in history and look at some of the biggest up days in history, they came during bear markets. Okay, so the idea that we're slightly positive this morning in the futures, that the market's on the way up a little bit, that doesn't mean anything in the grand scheme of things, and that uh, even in the worst of a bearish market, you could have an expectation of seeing a market move to the upside. Looking at what we have on the agenda this morning, you can see we have an absolute full house. 8:30, 10, 10:30, 11:30, 1. Right? The 11:30 and 1 are additional auctions. The 10:30 is the petroleum report. I don't see that report is going to greatly impact the marketplace because it normally doesn't. But that doesn't mean that it can't, right? I want to be very specific about that. Even some of the craziest things like surveys, which most of the time would not affect the market, can sometimes be a thing that affects the market. So we don't want to say that it can't do it. It's just very unlikely to be any sort of impact. If you do want to trade off the report, however, which is kind of a fun thing to do, it's relatively cheap with low risk. You would want to focus on USO, right? If you want to know what that trade would look like, go back and look at USO's chart on Wednesday. Go back a year, look at every single Wednesday for the last year, looking at it from a perspective of what happened to that chart at 10:30 in the morning when this report came out. See if you can find yourself a trade, find the market behavior that gives you edge to put a trade on. I know I usually get the answer, but that just seems like so much work. Can't you do it for me and make a video and tell me exactly how to do it? No. We are underneath the weekly pivot point. It's important to note where we're at. Are we above it and breaking down through it, moving towards it, moving away from it? Well, as you can see, we were at the start of the week underneath it. We tried to move towards it and that failed. And then we moved significantly yesterday. Now we're getting a little bit of that dead cat bounce, right? It's a pullback. It's just a pullback. Just like the other day on Monday, it was a pullback. And then we continued lower. Now we're in a pullback before continuing lower. Is it possible that we rally from here and continue the move to the upside? Yes, absolutely it is. This low could hold. Make no mistake about it. That low could hold. It's a very solid low. It's unlikely to hold, however, if we continue to see the Fed with that message constantly just hammering away at the market, trying to discourage dip buyers and rallies up out of this thing, right? And one of the things that we saw yesterday is Tesla. There are a few things that's holding this market up, and this is one of them. If this starts to fail, we start seeing more big moves like this, yeah, that'll finally be the start of the capitulation that we've been looking for. Now, if you look at Tesla compared to, say, Facebook, we're fine, right? Tesla isn't even close to looking like Facebook or Spotify or Zoom, PayPal, these things that are down, more than 50% or 60%. Google missed and it's down. It's trying to come back up this morning. It didn't miss by much. It might actually rebound. Uh, those This area here is where my butterfly is for earnings. So if we start to lose Tesla, Microsoft, Apple, that's it. It's game over. We're going to see the S&P break those lows and begin to retest the 400, maybe the 38 or the 36. %50 of our topping pattern would put us at around 3760, and 100% of this topping pattern would put us at 3400. And that lines up with the pre-COVID dip. That would be our downside target should things get a little bit rowdy, right? If you look at it from the big picture, this is just a Busby, right? It's a really, really big Busby, but it's just a Busby. What are we going to do today? That's really what it comes down to, right? Who cares about all that other stuff? That little cyan line right there is the 4-period moving average on a daily chart. When we happen to cross above that is a momentum play. It looked like we were going to get an opportunity this morning, and then it just took the smack down. WWE didn't work out. We're back below the floor pivot, which is why you see that daily PP right there. It's a daily floor pivot. Our Globex high lines up with the 4-period moving average. The Globex low, yesterday's low, and the Globex open all clustering down in this lower portion around 4150 to 4130. So there's a lot of area down there, a lot of pivot points down there, kind of all clustered together. We've got an ADR of nearly 2%, and we've only moved 0.25%. So we have 1.7 on the table that we could move. If you look at it from the perspective of swing highs and swing lows, this is the start of the move. Low, swing high, and then swing low, and then swing high, and then swing low, swing high. Right? So it's just that pullback, just a part of the play. Now, this is not a linear regression line because I used a drawing program to do that. But if we were to use the linear regression line, start it at the top, just drag your mouse. Notice it doesn't care if I got my mouse near the candles. It just matters where I'm at left and right on the screen. Just drag it across, put it in play. At that way, high to low, low to high, high to low, low to high. This is just the next wave up, right? Now, having said that, we do have higher low, and we do have a higher high. right? So from that point of view, we have one set, but not a full set for the beginning of a reversal. If this was going to be the reversal that we're looking for, we would want to see a full set. And we would also want validation or confirmation in the different sectors and industries. And now I've looked at this with you guys multiple times, this range that goes back to nearly the start of the year, or at least until January. That's our range, and we're at the bottom of it, right? High, low, high, low. Yeah. So on the grand scheme of things, we got one or two plays that we are going to break below and stick it at 41.50, actually hold that low and continue to move lower. Or we're going to rebound here, continue the dead cat bounce, turn it into something like a base with a cup and handle, and begin reciprocating our way back up to 52. That will take days, of course. What we want to focus on this morning is first looking at yesterday's price action and kind of asking the question, is there anything there that's going to get in our way? And how far could we move? Well, with that ADR of 2%, there's no market maker move this morning to add to that. We would first want to focus on our own Globex high. If we happen to break through that, then we will focus on yesterday's Globex low. That will put us at 42.70, basically. And that's very close to yesterday's RTH open. They're so close together. I think I would rather mark the open rather than the Globex low. It has more validity. After the open, we've got a pivot minor at 42.88. And then we've got Globex high of yesterday to deal with, which happens to be the high of yesterday, the absolute high of yesterday, 43.03. Could we even make it that far, right? Do we have an ADR that would even register that? Yes. It's 2.7 away from our current location, and we're already at 0.4. So it's just outside the ADR. Something to recognize, however, is the ADR is in a 22-hour time period. We've already burned 12 hours. That gives us about 10 hours left. If we're going to make a 2% move today, this thing better get in gear and get it done, right? And I mean, it's kind of moving the wrong way for that. We did have an exceptional bit of whiplash here. There was some news that came out of Russia about their, they are now sanctioning other nations, which is kind of funny. And they're demanding payment in ruble. And anybody who doesn't want to make their gas payment in ruble aren't getting gas. And the market didn't quite like that. It did rebound, however, right back up afterwards, kind of stuck it for a few minutes and then dumped back down again. That 4-period moving average, the momentum regulator, well, it did its job. It regulated. So we talked about the upside move. What about the other two scenarios? Well, one scenario is that we just maintain this range between 41.40 and 42.20. We could absolutely stay inside that range. We could. I find that very unlikely, but it is one of the three scenarios. We have a lot of econ on deck today, and I think that every one of those econs are likely to be significant. So I find it hard to believe that we will just maintain that range, but that is one of them. Fairly stated, we could just hold that line all day, right? That range. I would even be willing to call that zone 1 from our Globex high to yesterday's lowest point. And then the other half of that range, to kind of widen the range out a little bit more, encompasses the rest of yesterday to where our total range is 41.36 all the way up to 43. We would still be inside day if we stay inside that area, right? And if you're looking at it on the higher time frames, if you're sitting inside the previous candle, then you're not trending, right? You're not going anywhere. Even if we zoom in just to have that simple little discussion, if this candle is sitting inside of this candle, then we didn't go anywhere. We didn't do anything, right? And if this candle is sitting inside of that candle, we didn't go anywhere. We didn't do anything. So if today is sitting inside of yesterday's price action, it is a range day. We didn't go anywhere. We didn't do anything. Yeah. Now, even when we're inside of yesterday's range, the range is so very large that we could have beautiful price action, great trend, amazing trade opportunities. So I'm not saying it's untradeable. I'm not even saying that you shouldn't trade it. Absolutely go for it. Knock yourself out. It would still be a range day because we're sitting inside of yesterday's price. One thing I will add to that, though, is it's very likely to be choppy and difficult if we are inside of yesterday's price action. Normally, I don't think today would be that way because yesterday's range is very large, it's very wide. But generally speaking, when you have a very muted or narrow day, and then the next day is sitting inside of that day, you're very likely going to have a choppy, nasty, difficult trading day, right? But yesterday was really wide, plenty of room. And so if we stay inside of that, yeah, it should be easy to, I hate that word in trading. It should be less difficult, right? Easy is not necessarily the word we want to use there. All right, so we've talked about the upside move. We've talked about the range. Now we need to talk about, well, what if? What if this market really does start to break down? So far, knock on wood, so far we've been kind of just maintaining since the first of the year, right? Make sure you guys recognize where the first of the year is. Since the first of the year, we've been kind of just maintaining, surviving without getting that big major breakdown. The trend has been very clear. If you want to use that word loosely, the trend has been very clear. Right? We'll even back that up a little bit more. But should this low fail, it's going to be significant. We are going to we're going to see a lot of the algos selling into that selling. That's what they will do, right? They will use the ES futures and they will sell into selling. They'll use the futures because futures have a hard delta and options have a soft delta. They'll be trying to hedge their options risk by trading in the futures, and that algo only knows how to do one thing: sell into selling and buy into buying. That's what it's designed for, right? That's where we get those really big outsized moves. Also, if this does a head fake, if it gets down into that liquidity level and everybody buys those lows and then it continues to go lower, those buyers are then going to become sellers and drive the selling even more. So I want to be very careful if we come down into that low, right? Before we get to 4101.75, before we get there, there are a few other minor pivot points, lows from other weeks. We've got 41.27 and we've got 41.38. So I just marked 3 different weeks out here. And if you think, well, those lines don't really mean anything, it was just a weekly low. Noticing that big drive to the downside yesterday, it was just falling and falling and falling and falling, and we go in and going into the close, and what happens? We hit a pivot point and bounce right back up. Now, maybe it would have been different if that wasn't going into the close, but price did respond to that level. right? Say whatever you want. Pivot points are just amazing. Yep, yep. All right. There is a lot of resistance over our head at 42.20. We can see all of that volume sitting there right over our heads. It's been unable to break through it this morning. It is a significant level of resistance. It is our own Globex high, so it won't be hard to find. We are outside of the volume profile box, and we are moving farther away from the box. Generally speaking, that is not what price normally would do. Price normally would be moving towards the box, which is what it was trying to do, right, before the news. Look at these liquidation breaks. We've had two of them now this morning. So um, it takes an excessive amount of trading activity to drive price farther away from that box. And keep in mind the algos that normally would trade the basket being all of the companies that make up the S&P 500 that often drive the futures market, they're closed still, right? I mean, we're in pre-market. So the algos are not going to go in and hammer down into those. They're just going to target the S&P, right? So this is when we talk about driving order flow. What's driving order flow? Can we identify that order flow? Well, I mean, in the pre-market, no, right? Because there's, you know what I mean? Like, go look at Apple in the pre-market. Sure, there's some flow, there is some volume, but if we're talking about the basket of stocks that make up the S&P 500, the algos aren't in there trading in that basket of stocks and driving order flow. They're trading in this instead for now, for the proxy, till we open up. So let's take it over to the Nasdaq. Again, we took the rejection on the 4-period daily moving average. Let's just kind of clear all this junk off the way. We're underneath the weekly pivot point, but we were, until just a few moments ago, we were above the daily pivot point. Not no more. And we're actually back below VWAP. So we want to game it out the same way we did on the S&P. Range 1 would be from our own Globex high to yesterday's low. I would consider that its own zone and then encompass like everything, right? From yesterday's highest point to yesterday's lowest point, and I would consider that zone 2. That would still constitute a range day. If we stay inside of either one of those boxes or both of those boxes, it's still just a range day. Yet again, 13,500 is the high, 12,800 is the low. There is plenty of room in there to make very clean, very beautiful price action. So I'm not saying it's going to be choppy or nasty or difficult or that you shouldn't trade it. Plenty of room. We would need to break outside of yesterday's high to have a discussion about an upside move, right? That move would be from our current location. Too far away, right? It's that would be a 4% move from our current location. We have an ADR of 3%. So we could make the move. We could. We don't want to say price can't do it. But to make that sort of a move, you would need every bit of econ today to be good news. No gray areas, no ambiguity. It would have to be a shining beacon of hope and light on a day where everybody's still kicking rocks and shuffling their feet. So I kind of find it unlikely that we're even going to make yesterday's high let alone break above it and hit that weekly pivot point, right? It's doable, but it's unlikely. If we were to begin moving in that direction, we would want to focus on yesterday's open, RTH open, and then we would want to focus on yesterday's highest point. Between here and there, the only place that I see that there could be a little bit of concern is Monday's Globex, or it kind of ties in really close with like Sunday night's open, right in that zone. That would be 13.35. Right. So we want to validate that line. I mean, it looks like a good spot, but let's take it over to the volume profile and check, right? Because just because it looks good, or it looks like a valid spot, doesn't mean it's a valid spot. We do have a significant level of volume at that level, at that area. So now it's not just me drawing a line and saying that looks pretty good. We could just tie some pivot points in there. It's a little bit more than that. We can say, yep, that's an elevated level of volume. Should we get to that area, it's very likely to see a rejection, or at least an impact, right? Price will respond at that level to that kind of volume. There is another one at 13.25, so we may as well mark that while we're here. That old phrase, if you draw enough lines, price is likely to hit one. I hate that phrase, but there you go. We drew enough of them. We are outside the box, always worth noting that, right? When you verbalize and contextualize, where are we? We're outside the box. What do we do when we're outside of the box? Generally, we go back to the box. What are we doing instead? We're moving farther away from the box. Where's the point of control? Higher than the midpoint. It's in, right? That's it. Take it over to a 5x5. If we were to map out that 5x5 and put a little bit of edge or context or validity into what it is that we're looking at, kind of asking that question, where is everything? Where'd everybody go? This happens to be a point of control. So we'll just change that color a little bit. It's yesterday's point of control. It's where the most volume happened out of the entire 22-hour trading cycle. So we're going to keep that one. You could carry forward the value area high and low from Monday in the point of control, but we've passed through that. We've wiped it out, right? That's no longer an untouched point of control. It's gone. We dealt with that. So let's talk about the downside, scenario 3. Got a lot of junk on here. Just kind of clean it up a little bit. So yesterday we broke that critical low that we were looking at in the S&P. We're back above it at the moment. And it's worth discussing double bottoms for a moment. So if you were to go to IBD, Investors Business Daily, which I believe that their reputation precedes, right? That I don't have to try to convince you of the merits of their technical analysis. They're a well-respected, well-known firm, and they are very good at what they do. Well, they focus on like 4 major patterns. Out of all the patterns that they could focus on, they focus on those 4. And one of the 4 happens to be a double bottom. They've done extensive amounts of research on a double bottom. And one of the things that they highlighted in their research is that a double bottom should go lower than the previous low, for a number of reasons, some of which includes liquidity. So when you have a double bottom, you absolutely should expect price to go through that previous bottom. I can't see that drawing at all. If I can't see it, I know you guys can't see it. All right, so you got price that comes down and sets a low, and then it begins working its way back up. At that point right there, when we've now accomplished a double bottom, I used to believe that it was supposed to stop there and go the other direction, like that was supposed to be the bounce, the turning point, the place for me to find my entry on any time frame. Doesn't matter that we're on a daily, any time frame, any double bottom. IBD points out that that's not necessarily true, and that your better double bottoms, the ones that have the best follow through and the most significant amount of profit opportunity, actually go deeper and farther than the previous low, right? It's supposed to go through there. We want it to go through there. If it doesn't do that, then you would almost look at it from the point of view that it's a weak low, right? And if you study TPO charts and TPO talk and TPO language, that's what it would be called, as a weak low. So the fact that we breached yesterday's low, or yesterday, the fact that we breached that low, that makes more sense in the sentence, and that we went below it a little bit more before rallying back up makes absolutely perfect sense. And it's actually considered a good thing, not a bad thing. In the grand scheme of things, that's a good thing. Whether it sticks or not is a completely different discussion, because at the moment we're still dealing with the dead cat bounce. Until proven otherwise, we're going to assume with 100% that this is nothing more than a dead cat bounce. And you can call that whatever you want to call it, but it's basically saying that we've got a trend. We are moving in that trend in a particular direction, and price has now pulled back, and that it's nothing more than a pullback. It's not a reversal. It's not a basing pattern. It's nothing at the moment except a pullback, right? And so from that point of view, it's just a pullback, dead cat bounce at the moment. But we were talking about lows. So what if we break that low of yesterday and we continue that move to the downside? It's going to begin to get significant. Now we want to mark the area from the top, from that basing pattern we had as we went into December and into January, and use the quant tool to begin from the previous pivot point that we were just talking about, 12,974, up to that high. Now I could reach back into last year, but we'll just keep everything into this year, right? Well, actually, I guess I went back into last year either way. It's December's price. If you measure that range, the range gives you your targets, right? It's what we do when we measure ascending wedges and descending wedges. We do that with ranges, head and shoulders, cup and handles, flags. Everything has a measurement. You can take that measurement and plot it out in two places. It's 50% and it's 100%. The 50% move would put us down at 11,000. And at 100% of that range plotted out would put us at around 9,200. We're not going there today, obviously, right? We're just talking about the bigger picture. For today, what could we anticipate? Well, there is nothing down there on the volume profile. 12.5 would be an area where we could find a little bit of validity, right? We want to try to look at something like, see, a volume profile on a daily, it is doable. I wouldn't put a lot of weight into it. I know that there's a few technicians that do this and look at it on, that yearly time frame. I think if you wanted to do that, do it just like when you anchor a VWAP and use something like year to date, but that doesn't give us anything lower to focus on. And we actually have to use a 2-year just to have something lower, right? Because we're at the 2-year low, so we need something more than a 2-year, or we're at the 1-year low, excuse me, not the 2-year. So we need something more than a 1-year low. And when you do that, you can see that we've got the value area low very close to my line. So I didn't just pull that rabbit out of a hat. It matches up very close with the value area low. Again, that's a 2-year chart. We're talking about, contracts that don't even exist anymore. Remember, we're not looking at stock, right? Those contracts from way back there are gone. So it's not like we're talking about old liquidity. With an ADR of 3% and being up 0.25%, if things were to get nasty, I would start targeting levels of 12.7, 12.6, and then if things get really bad, 12.4. Even just to go to 12.8, which is yesterday's low, would be giving back everything that we've got so far plus a little bit more, right? That would be a move of 1.5% to the downside. We'd be at around 1.5, because we want to take away the percentage we've already made this morning. From that, if we were just to go down to that first, what I call the warning center on my fib, the 11 line, we're looking at a nearly 2.5% drop, right? Taking away our percentage. And then to go to the actual fib target of 123.6, that would be a 3.6% drop, right? Or 3% drop, taking away the percentage we've already got. So a 3% move, that lines up with our ADR. So my fib target of 1236 matches our ADR perfectly. Again, it's not just randomness, right? We don't just pull these numbers out of the rabbits. Beep, beep. These markets are not moving by themselves. Want to take a look at what's going on out there. Bitcoin has been a really useful tool to kind of validate the move. When I've been seeing the S&P and the Nasdaq making moves, I like to see it confirmed or at least in agreement with Bitcoin or vice versa, and that's been working out relatively well. The dollar got a little shady on us yesterday. It made that pop to the upside and just kind of stalled out. When it stalled out, I started watching the KRE and the XLF, the financials, and KRE was giving some really good, insightful signals. Yesterday's VWAP bounces were perfectly timed with the S&P and the Nasdaq breaking off every time. So beautiful trade setups, right? In the KRE. And it's not like I spend time watching the KRE, but the dollar was such a dud yesterday that we kind of had to find something else, yeah? Keep your eye on energy today. Remember, we got the petroleum status report at 10:30. That break in oil yesterday to the upside didn't really impact anything from our perspective. You know what I mean? Like it wasn't like, oh, we're breaking out, let me short the market. But it was significant. And we actually saw the order flow picking up through that breakout, right? So there's that. The VIX has continued to be an absolute turd. It's completely worthless. But we are slipping into backwardation again. Remember how to validate that? No. Okay, so you go into the trade tab, all products, take it to the VIX to be the VX. Yeah, type it better than me. And it asks, which symbol do you want? God, come on, get out of it. So you've got these expirations, right? And I haven't scrolled yet, so we're basically looking at 28 days. But we want to take that out a little farther because what we're looking at here is dates and cost last. In a normal distribution market where you have time and money, things that are close in time, generally speaking, are very often cheaper than what you would see in the future for the same product, right? Because the farther out you go in time, the more uncertainty you have about events in world history. Wars, famine, feast, presidential elections, all kinds of things can happen in the future to upset the apple cart, right? For upset how much things cost. Well, from that perspective and that point of view, that's what we call contango. That's normalcy, right? Normal, contango, same words. So if we slip out of that and we actually start having things go in the other way around, things that are close in time becoming more expensive than things farther out in time, well, we call that backwardation. When it comes to volatility and options pricing and everything that's connected to volatility, backwardation is a real dangerous, really bad thing. How can you see if you're in contango? Well, start with something like a 28 day. Don't look at the 14 and the sevens. Those are worthless. You could maybe look at 21, but you're pushing your luck. You really should just look at around 28 to 30 days. Because remember, the VIX is volume on the 30-day SPX options, right? So you may as well look as close as you can to 30 days to start your lower end. That would be 28.70. I will point out, however, by the way, that the 21 day is at 29.60. All right. But we just leave that alone for a moment. Focus on the 28. It's 28.70. Scroll a little farther out. So we were looking at May. Look at June. June's higher than May, right? May's 28.70. June is 29.30. August is 29. Whoa, wait, what? We went from 29.30 to 29. It's starting to go down, right? It's supposed to continue to go up. So we're slipping into backwardation this morning. And then we got November at 28.45 and December at 27.50. We didn't have any 27s up here, right? So the far end of that curve is already dipping lower than the front end of the curve. That straight up is backwardation. If you go into product depth and you bring up the VIX futures, that's what backwardation looks like, right? It did a much better job of drawing the curve than I could do. The really cool thing with these curves, if you go in and add a curve, is you could come in here and say, what did it look like the other day? Right? How about yesterday? Nope, we were in backwardation. Monday, no, we were still in backwardation. The weekend, nope. Friday, Thursday. Thursday looked much better, right? We had that nice curve to the upside, and then it just started to change over. Backwardation. We are in it, right? No arguments about that. I mean, you can argue, but nobody'd listen to you. All right, everybody, that's what I got. I will be streaming in the large caps this morning. So be careful, be safe. I'll see you all there.